All right, I think we can start. Once more, good evening, and you're all welcome to our episode 2 of our free Forex webinar series. Who can remember, where did we stop last time, or what did we do last time? This is a continuation of what we did the first week, as well as the repetition of last week. What did we do last time?
For me, I remember the introduction of when you were saying who are the players in the market and what it pays to trade, and what else did we talk about? Yeah, something like that.
Okay, the players in the Forex market and how to trade. Who else? Just a quick recap of what we did at the previous episode.
Okay, so you just ran through, you introduced what Forex is, who are the players in the Forex market, and then you also spoke about how to like start your own account, kind of like the steps involved in starting your own account. Then you also explained lot sizes. What else? That's all I can think of from the top of my head.
Okay, that is Gina. Last week we did. Let me just show.
Joe.
Yes. Huh?
Please mute everyone.
Yeah, I did mute everyone. Yeah, that is what we basically did last week. That is just the introduction to Forex trading. What is Forex and how does it work? And then we did creating account, setting up the account. That is the MT5 platform as well. How to customize it. That is changing of the colors on the MT5 platform. We basically did the PC version, and I promise you that we will continue from there, learning how to use the phone version as well. So based on our, let me just share my whole screen. Yeah, based on the course outline, let me just share with you the course outline. I can't hear their chats in the chat room that there is a sound problem. I think it's just them that need to activate their audio settings. Okay, this is what we are supposed to cover. We are going to continue from there. That is, we covered this section already until setting stop loss. Did you do setting stop loss last week with the other group that missed the first week? Let me just see it in the chat room. Did we do setting of stop loss? Say yes. No. Okay. Then we are going to start from there on how to set your stop loss. The first thing that you need to do as usual, let's log into our Forex account. I'm going to log into one of my accounts. Hope you still remember how to log into your trading account. Always have two-factor authentication on your account. Let's quickly move to our accounts that we created last week. My network is a bit so slow. We switch from real to demo. We had yeah, for now, since it's a weekend, we are going to take the derived route. Let's copy that and see if we can log it into one of our accounts. We did these things already. Let's clean it up. Yeah, let's continue with setting TP, stop loss, and take profit. You can't see the screen. Hope you can see the screen. Someone just said, let me see in the comments. Can you see the screen? Okay, good. Then we continue with how do you set your stop loss and take profit? Let's assume you buy you want to buy volatility 25 1S. We set it to 0. To pick the minimum lot, we just start increasing, or we can check it in the specification. This is a continuation. Or we have to assume that you mastered what we did previously. So as soon as you get the minimum lot, it will be activated. Then you click, if you want to buy, you click on buy. If you want to sell, you click on sell by market. That is, we are going to go ahead and buy, for example. Buy is when you do your analysis. How do you do your analysis? That is what we are going to cover in the future. After you do your analysis, you make your prediction that the market will go up, then you buy. So after you buy, maybe you want the market to come until at this level. If you are wrong, remember, if you are wrong, you are going to make a loss. If you are correct, you are going to make a profit. The more it goes, the more you will make profit if you are correct. The more it goes in the right direction. And the more it goes in the wrong direction, the more it's going to make a loss. Then how do we then determine how much we are going to lose? That is, we use what is known as stop loss to determine how much you are going to lose, as well as take profit to determine how much you are going to make. So from the beginning, just when you enter your trade, you tell your broker, it's you to decide that if you are wrong, how much you are going to make. If you are wrong, how much you are going to lose. And if you are correct, how much you are going to make. So you tell your broker, I am buying volatility 25 index. If I am wrong, I want to lose a $10. And if I am correct, I want to make a $20 or a $30 or $100 US. So you are in control. You have the final decision to tell your broker. We do that by using stop loss and take profit. How do we then do that? The first thing that you have to do is determine your minimum lot, and then on your PC version, the easiest way to do is you come to the dotted line. Remember, after you buy, you will have a dotted line. You come on this dotted line on your PC. I'm not sure with the phone version. Speaking under correction, I rarely trade on my phone. I just use it to view my open positions. On your PC, to set a stop loss, you simply just come to this dotted green line. That is your entry level. Then you drag with your mouse. You drag. That is after you drag. Let me just clean up. You drag from the green line. As you are dragging, you are going to see a red line, and then on the red line, on the left of the red line, there is a number that is saying SL. That is the shortcut or the abbreviation or an acronym for stop loss. SL is an acronym for stop loss, and TP is an acronym for take profit. So what we have here is, as you drag, it's going to show you a balance based on the lot size that you have used. In this case, our balance is a negative 4.91. If you see closely, there is a small number. You really have to check closely as I'm dragging somewhere here. This number is telling us the amount that we are going to lose if we are wrong. That is, the more it goes, the more you are going to lose. That is, if it comes until here, you are going to lose a $10. If it keeps going down, in the wrong direction, you are going to lose a $14. Then here you are going to lose a $19 and a $20. Then wherever you want to set your stop loss, let's say if you want to lose a $20, you simply just have to release. You stop dragging, then it's automatically gonna set your stop loss. Meaning, if you open this position, this is where we have opened the positions. If you open this position, and then this market comes until at this level, you are going to lose a $10. What will happen is if you open a position now that it's evening time, you can go to sleep. The market will keep going up and down, up and down. Whether your computer is on or off, the market never sleeps. The second the market will reach at this dotted red line, your position will automatically be closed in a negative $20. You have given an order to your broker that I am going to sleep, but if you see the market at this level, I am wrong. I want to accept that I am wrong. Take me out in a $20. That is what is known as a stop loss. So why do we set stop loss? It's basically to mitigate the risks. We usually set stop loss to control the risk. The market, as you can see, it moves up and down. There are times that it happens that you enter here, then it will go down a bit, then it will start going up to your right, to your correct direction. Then what we want is we don't want to set a very tight stop loss in a way that the market, just when you enter, the market will just come down a bit. It's called a pullback. It will just pull back a bit. Then it will start going to your right direction. When you wake up, we're like, no, just after I entered, the market took me out. That is known as a stop loss hunt. It's like the market knew where your stop loss was. It just went down to take down your stop loss. Then it started to go back in the right direction. But what usually happens in Forex is if you enter at a specific level, if you enter here, then the market starts to go down, you will be in a loss. But if you are to continue to hold and then the market turns around for it to go in profit, you will start to make profit the more it goes. There are times that there's a blame game. I don't know what happened that the market had to kick me out. Not the market, I mean Zoom. Probably my network. I hope we are back on track. There's a blame game in Forex. You will see that you will feel sometimes that maybe the broker is watching you. Just after you enter, it will just take you out. Then it will start going to your direction without you. That is known as stop loss hunt. So what you are going to do is that is just setting stop loss. Let's just leave it there for now. And then you can also tell your broker that I am opening my position here and I want to hold until at a certain level. If you see the market coming up to maybe a $20 or a $40, please take my profit for me and keep it. That order, you are ordering your broker. It's known as take profit. To do that, it's just the same way. You can simply drag from the dotted line. That is the level that you, from the level that you open the position, you drag. As you are dragging, you are going to see the balance on the left. That is if the market comes until here, you are going to make a $15. And if the market comes until here, you are going to make a $30. So wherever you want, you just have to simply release, and then it will automatically set this the take profit for you. That is how to set a stop loss and take profit. So what will happen is if your computer is on, you go to sleep, and then the market will then start to bounce, to dance around as it usually do. It will go up, down, it will go up, down. So what will happen is if the market comes here, it's going to take you out in a loss. And if it goes up until there, it's going to take you out in a profit of a $30. That is how to set your stop loss and take profit. What then if you have opened multiple positions? Let's say you bought about 5 times. That is, you go on volatility 25, you buy again, you open a second position, then you buy again. That is, you open a third position. These positions, you are going to see them at the bottom here. You will see them at the bottom here. Let's say we buy about 5 positions. What will happen is the first time that you drag, let's just simply cancel them out. The first time that you drag, it will set stop loss and take profit for a certain order. And then the other positions will remain empty. That is, they don't have this stop loss and take profit. It's only one of the order that have the take profit and the stop loss. To set take profit and stop loss for the remaining orders, you just simply have to come here in this box. You just have to simply come there, you double click in that box, you copy it. The box will open, this box will open with these digits in, meaning where you have set the stop loss after dragging is at that price, and the take profit is set at that price on the position that you have used to drag. We are just going to simply copy these digits and paste to the remaining boxes that are empty. That is what you do. If you want to use the same stop loss and take profit for the remaining positions, you just have to simply double click in the empty box where there is no stop loss, then you paste, you say modify position, you double click again, then you paste, then you say, after pasting, you say modify position. That is, there is this option, modify position. That is, you paste the price there of the stop loss, the price level, then you click on modify position. Then we do the same for the remaining one. We say modify. The same goes for the take profit. If you want it to apply across all the open positions on that instrument, you just have to say modify position. You modify the position. We do the same. So what we have here is it's an order. Just a quick recap from last week. This bar here, if you bring it up by Control T, it shows the balance. Like now we are in small profit on the positions with overall profit of a $2, then equity and so on. Before we proceed, let me see if we have questions on setting stop loss and take profit. Just unmute yourself and come through.
It seems to be clear. I think I got it.
Do we know what is the purpose of stop loss and take profit, and how do you set?
It's fine.
How do you set your take profit and your stop loss? That is what we need to understand.
Yes.
Okay, good.
Yes, we know.
Okay, good.
Take profit is
Okay, news.
Then let's move forward with
Sorry, hi.
hi, Gina.
Yes, I just have a question because you said that how do you determine your stop loss and take profit? Or will we cover that once we get to analysis? Like, how do you know? Like,
Yeah,
this is
that one
the take profit you should put in. This is where.
Yeah, where to put stop loss and take profit, those are some advanced topics. It's determined by the analysis that you're doing. It's based on your analysis.
Okay.
Yeah.
Thank you.
Welcome.
So I'm having a small question, Mrs. Lata. I just want to know, can I really able to relay on those stop loss and take profit that I put? Or do I need to watch my trade?
Once you set your stop loss and take profit, if that is where you want the market to take you out when you are correct and wrong, you can rely on them 100% because those orders are on the broker's computers. The minute that price will reach at that level, those positions will be automatically closed either in profit or in loss based on the orders that you have provided. Whether your computer is on or off, you can definitely rely on those stop loss and TP orders.
Okay, thank you very much.
Welcome. The next thing that we have to cover, it's pending orders. This is useful to those that are very busy people. You don't have time to sit and watch the market. How do you then trade? If you are busy, you have a full-time job, or maybe you want to sleep, but you have been watching the market maybe this evening, like now it's 8:36. You have been watching the market from 8 o'clock, but you are tired, you want to rest. But there's a certain opportunity. You are waiting for the market to satisfy some certain conditions before you can buy or sell. What do? There is a way to tell your broker that let's just close these positions. To close all the positions, remember we learned about bulk operations. Let's just close all. Using a bulk operation option. Let's say you are watching the market, and then what you want is you don't want to buy now, based on the analysis now. We are going to do analysis in the future. You don't want to buy now. You want to wait for the market to come until at this level. Maybe that's when you can buy. There's a way to tell your broker that I am going to sleep. It's late, I'm tired, I have work tomorrow. But if the market will come until at this certain level, buy it or sell it for me. Or maybe if the market, maybe you want the market to go a bit down before you can buy or sell. You can tell your broker as well that I'm going to sleep, but if you see the market reaching at this certain level, buy it or sell it for me. That is known as pending orders. There are different types of pending orders. TP and SL is one of them. And then how do you then tell your market? Or maybe you are busy. Let's assume you are at work and you need to attend to your normal duties. Let me just mute you all. You need to attend to your normal duties. Your boss might be on you, like you are trading during work hours. So why are you doing that? So how do you then trade while you are busy or while you are asleep? So that is, you can use pending orders. On a PC, it's very, very simple. There's a shortcut to that, and then there's a manual way to do that. So let me just show you the shortest thing that you can do. Let's say you have identified this level as the level where you want to buy up here, or maybe at a certain level somewhere there. Maybe you want the market to go up a bit. As we speak, the current price is here. The current price is indicated by the horizontal line that we have here. That horizontal line, or at the end of the last candlesticks, that is how you determine the current price. So as we speak, the price is here. Hope we can all see that. You want the market to go up until at this level. Then you want to buy when the price will reach at this level. What you do on your MT5 platform, we're gonna do, for those that want to trade with TradingView, if you see on my last screen, right there, I am using TradingView. It's one of the best websites to do your analysis. We do analyze on TradingView, and then we do our execution. We open our trades on MT5. For me, you don't need to have multiple screen or monitors like me. But when you be advanced, it's more necessary. This one is called TradingView, one of the best websites to analyze on. We do our analysis on TradingView. We do our execution, or we open our trades on the MT5 platform. So you watch your market here, you trade here, you watch your open positions on the other screen. So the other things, it's like it's just like that. You can also trade your, if you are trading the right boom crash volatility here, then after you can trade currencies, you can watch the news on the other screen. So that is more advanced things. But let's say on MT5, you can do this on MT5, on TradingView, or any other trading platform, or any other web application. So what you do is very simple on MT5. You just have to go on the level where you want to put your pending order. If you want to buy at this level up there, you just right click, you put your mouse there at that level where you want, you right click. After you right click, these options will come or will appear. You go to trading. You will see an option, trading. Then after trading, you place what is known as a buy stop. After you click the buy stop, you will see that there's a dotted green line up there. This dotted line, it's telling your broker that I am going to sleep now, but if the market comes here, please buy it for me. The minute your market or the price will reach this dotted line, the broker will automatically buy volatility 25 for whichever instrument that we have used for you, whether your computer is on or off. You have given the broker a homework or an assignment to do that for you. And then how do you set your stop loss or take profit? You can tell your broker that buy it for me, and after buying, if it comes until here, meaning you are wrong, né? You've been lost. So if it comes until here, take me out, meaning this is where you set your stop loss. Take me out, meaning close it for me in loss. That is a stop loss. And if it comes until here, close it for me in profit. So you tell your broker 3 instructions that I'm going to sleep now. But if the market comes until here, buy it for me. There's a dotted line. And if I am wrong after buying, while I am still sleeping and it comes until here, close it for me in a certain loss of at that level. And while I'm still sleeping or while I am still at work, if it comes until here in good profit, close it for me in profit. You can give all those instructions to your broker. The first thing is done. We have placed our buy order. The next order is we have to determine this stop loss and take profit. To do that, you use this horizontal tool, this horizontal line on our MT5 to determine the price of those levels where we want to set our take profit and our stop loss. To do that, you just have to simply click on that horizontal line. You paste it where you want. It's right there. You click on the horizontal line again. You paste on the TP. And if you look or zoom closely, next to this horizontal line, there are numbers. Here we have a number that is on that horizontal line, it indicates the price at that level. That is what that number is indicating. That number is a 2259, and then this is the price at that specific level. That is what that number is indicating. So what you do, you just have to make use of this number to set your stop loss or your take profit. That is the price level. What you have to do is you can simply double click on that dotted green line. You double click on that dotted green line. Then you manually punch in the numbers. Unfortunately, speaking under correction, for these ones, you cannot drag. You can simply just drag after you have set the TP and the SL. You simply type in the number. On the stop loss, our number is a 2183.830. And then our take profit, it's a 2259.252. Then you select this button that says modify position. You come to the modify position. We are going to modify that order. Then if you clean it up, if you clean up your chart, you are going to see dotted lines here as well as here. Let's just go ahead and clean it up. If we clean it up, we are, let's remove the horizontal lines as well. Let's clean it up. Can you see? Now we have 3 dotted lines. So this dotted line, these are our pending orders. This dotted line is telling the broker that if the price comes until here, buy it for me. This dotted line at the bottom is telling your broker that after buying, if the price comes down, this is my stop loss on that order, close it for me. And then up there, it's the take profit. After buying, if the price goes in your direction or in your favor, which is known as, there's an acronym, ITM, for traders. When it says after trading, when I say ITM, it basically means in the money. That is, we are in the money, we are in profit. Then there's OTM. OTM is when you open a position and you are in a loss on that position, it's known as out of the money. Those are acronyms that you need to know. And then remember that what we have here, we have about 4 instructions that we can tell our broker. The price is here. You can tell your broker up here that buy it or sell it for me. You have 2 orders on top that you can tell your broker. At the bottom is the same. You can tell your broker that as it comes down, buy it or sell it for me. How do you set those other orders? It's the same. The manner in which you have to set them is basically the same. That is, you can just right click wherever you want the broker to buy or sell for you. Go to trading. If you want it to sell at that level, use the order sell limit. If you right click at that level and you want the broker to buy it for you, use the order option buy limit. And then with MT5 on the PC version, you will realize that as you right click, automatically you are only going to find 2 options at the top. That is either you want to buy or sell at that level. The same applies to the bottom. You just have to right click at that specific level where you want to buy or sell. You go to trading, then you have sell stops and buy stops. So we have 4 orders: buy stop, sell stop, and then buy limit and sell limit. And then for MT5, you don't need to question yourself, which type of order do I have to use? Automatically, just when you have to right click on the platform, it will just give you the 2 available options. At the bottom, it will just give you 2 available options, whether it's buy or sell, which is the same for, let's say at the top, it will give you 2 available options. That is either to buy or sell. You can say sell stop, and then you can say buy stop. And then if you want, if you are trading with a phone, accidentally disconnected the audio, can you connect me? I'm just going through the charts. Someone is saying, can you please drop all the videos for episode 1 and 2? Unfortunately, this is a free session. It's really your task to attend. Don't give me extra work again to drop you videos and other things. Okay, I think so far so good. Let's proceed. Then if you are using a phone, unfortunately, this option of automatically, these options coming up automatically are not there. If you are using a phone, you have to memorize what is a sell stop, what is a sell limit, what is a buy limit, and so on. So you actually just have to refer to this, that if you want to buy above the current price, that is a buy stop. If you want to sell below the current price, that is a sell stop. And then if you want to sell above the current price, that is a sell limit. And if you want to, my video seems to be freezing for some reason. I don't know. Is the connection fine that side? Let me just, if the sound is fine, then it's fine. You don't need to worry much about the video. Let me see a yes, if the connection is fine that side. Let me see a yes in the chat room. Okay, good. Someone that said he did not get how to use the bulk operation. Bulk operation, please do not skip these lessons. Bulk operation is when you have multiple positions open. Let's say you buy volatility 25 about 5 times. You check down here at the bottom. We buy them about 5 times. We have them running or as many times as you want. There is an option for you to be able to close either all the positions that are in profit at once, or you want to close all the positions that are in loss at once, or you want to close all the positions, both profit and loss. You just have to come to where the open positions are at the bottom by using Control T on your keyboard. By using Control T, and then you right click, you will see an option right there, bulk operation. When you right click at the bottom, at the toolbar, bulk operation, you have an option to either close all the positions, close profitable positions only, or maybe just for specific instruments. If you have multiple instruments open, you can choose to open maybe only on Euro USD while you leave the remaining instruments running. So in this case, to close all the position, you just have to select close all positions. This is a very, very important function, especially news trading. Those that love to trade the NFP, CPI, or any other news events, those will be very, very important functionality, because news is very fast. Fundamentally, it's very fast that you want to react fast and close all your positions at once or all that. So bulk operation will be very useful in that case for news traders. And then before we move forward, do we have questions on that? Let me just unmute you all. Do you have questions on what we just covered?
Okay, thank you. Yeah, it's clear now. Thank you. I'm the one who asked about bulk position, but now
Okay.
as you explained, I got it.
Okay, good. Good to hear that you got it now.
Sir,
Yeah.
sir,
Yeah.
is it possible to do that to close all the positions on the cell phone?
On the
phone.
Yes, it's very possible to do that on your cell phone.
On the phone.
Yes, it is. It is very possible.
Okay.
That option is also available on the phone version of the
Can you
MT5.
please explain for me so that where can I get it?
We'll move to the phone version later. We'll be moving to the phone version soon. Let me just charge my phone. For now, we are working on the PC version. If you are interested to know how to do that on the phone version, we are getting there, worry not. I will explain to you how to buy and sell. We'll basically have a quick recap, but using the phone version now.
Okay, sir. Thank you.
All right, welcome. Any other questions, or should we move forward?
Move forward.
All right. Moving forward, let's have pending orders. We are done. Now we have to cover lot size. What is a lot size? I believe we covered, did we cover lot size in the second session last week? The first session, I think we did cover that. I'm not sure about last week when we had a repeat. Did we cover about lot size? So we skip it, or we need to cover it? What is a lot size? Why is a lot size important? How do you determine all those things?
Yeah, I think based on my knowledge, a lot size is it's a number that determines how much money that you're gonna lose or how much money you're gonna make. So that's how simple I understand the lot size.
Yeah, you are very correct. I just want to understand if we covered or if I explained to everyone what is the lot size and practically an example on how to use a lot size, or should we work on it?
Yes, you must work on it.
Let's work on it.
Okay. What is a lot size? Like your colleague just explained very well. It's a number that determines, it works together with the stop loss and take profits. It's a number that determines the volume or the risk that you are going in the market with. Let's say when you use a 0.5 lot size, this number that you are seeing in this box, let me just mute you all. This number that you are seeing in this box, it's a very important number. That is what is known as the lot size. And then you can also find it when you use the new order option. That is, we click on new order. You will find it here as the volume. That is the lot size. In this case, the minimum lot size or the minimum volume, to find the minimum volume, just a quick repetition, is you set everything to 0. You set this amount to 0. If you are not sure what is the minimum volume, you set everything to 0. Unfortunately, for a phone, you cannot do that. It's only available on this method is only available on PC. All in all, what you're trying to say is you can trade with a phone, but if you want to make Forex as a business with a few money that you'll be making, either from the signals or something, upgrade and buy a cell phone. It's very, not a cell phone, and buy yourself a laptop. It's very, very important to invest in your Forex career. That is, you set everything to 0. A computer will make things easy for you, but you can basically do everything on your phone as well. That is, you start to increase the volume. The moment you find the minimum lot, these two buy and sell buttons will be activated. Then you can go ahead and buy with a volume of a 0.5. In that case, we have bought with a lot size of a 0.5. That is what your order will read like. Your order will say, it's a buy 0.5. It's a buy with a 0.5. That is the volume at this price. What is a lot size? When you buy with a 0.5, after you drag to check your stop loss, you will find that your stop loss, let's say it's maybe let's set it to $10 for the sake of easy mathematics. Let's say you set the stop loss at $10. Someone that will buy with a bigger volume as yours, when you will be in profit of a $10, in a loss of a $10, or in profit of a $20, for example, or in profit of a $20, let's just simply set our stop loss and determine the. Hope you are following how I'm finding the amount. That is after dragging, the amount is showing on the left. Are we okay there? Let me see a yes in the comments. On how I'm determining the amount of the stop loss and take profit, yes, we are okay. Okay, good. And then someone that uses a bigger volume as yours or a bigger lot size, when you will be in a loss of a $10 or in a profit of a $20, that person will be in profit or a loss bigger than yours. A lot size, you can also understand it as a multiplier of your risk that will determine your profit and your loss. In this case, what we have is if we use 0.5 times 2 of 0.5, it's a 1 lot. If you use a 1 lot, someone uses a 0.5 lot. You that have used a 1 lot or someone that have used a 1 lot, let's go ahead and buy with a 1 lot. We'll have another position open. If you zoom into the smaller time frame, you can see that you have one position here. We have two positions. That is a 0.5 lot and another position on 1 lot. Then when we dragged the one for the 0.5, we got that this stop loss was a $10, remember? Then when we are going to drag with a $1 lot size or the volume of a 1, not a $1, 1 standard lot, you are going to find that when you will be in a loss, this person will make or will lose times 2 as you are losing. When you will be in a loss of a $10, this person will be in a loss of a $20. The same applies to the profit zone. Let's just simply drag to separate it a bit from there. When you will be in a profit, when you'll be in profit of a $10, this person will be in profit of a $20. When you'll be in profit of a $50, this person will be in will be always be times 2 for both profit and loss. That is what I'm trying to say. So this lot size, it works hand in hand with the balance that you have. This is what determines your risk. Because if you deposit a $50, $50 US, you might want to risk a $5 at a time only. And then when you are in profit, you make a $10 because it's a small deposit. But if you deposit a $500 US, you can risk even, let's say, a $20 or a $30. You use your volume or your lot size based on how much account you have, the account size that you have, as well as how much you are willing to risk. So the lot size plays a bigger role on determining how much you are going to make as well as how much you are going to lose. We have a chapter on its own. That is about chapter 8 on how to determine how much to risk based on your account size, how to determine the lot size to use, how to determine where to set your stop loss, how to determine where to set your take profit. That is a topic on its own that we are going to go deeper later in the future. And then hope you get the general idea of the lot size. It also goes together with leverage. Leverage and margin, those are key areas that you have to focus on as you are determining your position, your lot size, and so on. We're gonna cover what is leverage very soon. And then before we move forward, do you understand what is a lot size? Let me just unmute you all. We don't want to rush things. We have to make sure we understand every.
Yes, we do.
Okay, good.
Or I do, rather.
Yeah, we do understand
Yes,
the part of the lot size.
yes,
But
I
as I've
understand the
said
part
in
of lot
comment
size.
section,
All right, good.
as I've said in the comment section that the lot size, I think it plays a big role in trading, especially on the spot, because
Very well.
it also determines the what your emotions. The bigger the lot size, the more
profit you make.
the what Yeah.
Next that we are going to
Not
cover,
the emotion.
So, Mr. Slater, I'm having
I think we had a question right there. Let's take it up. My name is a bit a tongue twisting word to pronounce. It's pronounced as cylinder, not slanter. It's a cylinder. The way you basically read it, it's just follow the reading, cylinder. Okay, you can come through with a question. Let me see if I've allowed you to mute yourself. We had a lady that wanted to ask a question. Come through. Don't be shy. Feel free. This platform is for you to learn.
So the question that I was want to ask is, how much do I need to have on my account for me to use a lot of size? How much? Or it doesn't no matter how much I'm having, I can use a lot of sizes as long as I'm ready to risk what I have.
Yes. With Forex, that will be answered by the next, the upcoming topic known as margin, not leverage, margin. Margin tells you how much you have available that you will be able to risk. This one, the margin level, margin percentage, this one, especially this one. This area of margin tells you how much you are able to risk. That will determine the lot size that you can use. But with Forex, you are in control. Let me just mute you all. You are in control. You can use the biggest lot size that you have as long as your margin can allow it. If your margin cannot allow it, the broker will tell you you do not have enough money. It will reject your order. When you try to buy or sell with a big lot size, maybe you only have a $5, the broker will say you do not have enough money to open the position. But just bear with me. Let's just cover the margin part. When you cover margin part, at least you'll have an understanding on how the lot size and leverage and margin is connected, as well as your balance. This whole area down here, how is it connected and how you can apply it. Then let me check in the chat room. Okay. Let's move forward. The next point that we need to cover, remember we are still in chapter 1. Forex is a big course. We are still in chapter 1. The next thing that we have to do is base and quote currency. What is a base currency and what is a quote currency? Let's move back to currencies. We have to use let's try to use our board. Currencies are quoted in pairs. This is what we did the first day in episode 1. Remember, currencies are quoted in pairs. For example, you have a Euro USD or you have a USD NAD. Then these currencies, one of the currencies is known as the base currency. The other currency is known as the quote currency. Which one is the core currency and which one is the base, and why is it important for you to know that? The currency that is on the left, the currency that is on your left hand. Remember, we have two currencies. Like now, we have, in case of currencies, not derived products, this applies to currencies only, not derived products, not volatility. Volatility is boom crash, they don't have this story. But for currencies, since it's the mother of Forex, currency is what runs Forex trading. You have two currencies. There will be one on the left. In this case, we have the USD on the left, and there will be one on the right. The one on the left, it's known as the base currency, always. And then the one on the right, it's known as the core currency. In this case, we have euro. Euro will be the base currency, and then USD will be the core currency. What are we talking about? Is it Chinese? No, it's not Chinese. It's Forex. It's the Forex language. Why is this important? You will realize that you will find that on an exchange rate, you have numbers. Like now, the rate for US dollar to Namibian dollar, today it was trading, I'm not sure about the current market price, but it was trading at 18.34 this morning. At 18.34. Hope I informed you that I will be opening in an office or offices soon, and there will be vacancies that will be open. So there will be interview questions, very simple. We want people that have backgrounds in the Forex market. Someone with a background in Forex will simply know things like exchange rate of the day. If you cannot tell what is the exchange rate, maybe if you cannot tell where Bitcoin is trading as we speak, if you cannot tell the exchange rate between USD to NAT, then which Forex are you really trading? So you see, these are the kind of interview questions that we are going to have, like simple, like what is the exchange rate for today? Just USD to NAT. At what rate is Bitcoin trading? Simple as that. So these are simple questions that can really determine, like, if you are just a chance taker or you are someone that is coming from the Forex background. So we need to have people on our team that really, really understands Forex, not someone that we are going to teach. Okay, let's get back to this. There will be vacancies that will be released. Stay tuned if you want to work or join our Cinta FX team as we go ahead and open our offices. So this exchange rate, let's say for USD to Namibian dollar or USD to ZAR, that is the South African rand, since the NAT is pegged to the ZAR or it's attached to the ZAR, what does this mean? This means you need, if you give me a $1 US, I can give you an 18.34 Namibian dollar. This is what it means. You need 18.34 Namibian dollars to buy a $1 US. That is what it means. The buying and selling, depending on which currency you are selling. Meaning, in most cases, not all the cases, there are rare cases. In most cases, the base currency, it's always a 1, and the base currency is usually the powerful or the stronger currency between the two. Remember, you are comparing two currencies. One of the currency will always be strong and the other one will be weak. The stronger one will most likely be on the left as the base currency. And the value of the stronger currency will always be a 1. And then the left one, that will determine, the exchange rate will determine how much you need to how much of the currency on the right do you need for you to acquire or to be given one of these currency that is on the left? Meaning in this case, we need $1 to be given 18.34 Namibian dollar. If you want to buy Namibian dollar, you give $1, they give 18.34. And then if you have 18.34 Namibian dollars, you will be given a $1. So the whole ruler that we see here, the whole ruler that we see on the exchange rate on the MT5, this is the price that you will see on the MT5. Here, we can simply say it's a ruler with numbers there. These numbers that we see here, they are applicable for the court currency. That is the court currency amount. Since the base is always, or it's usually a 1, so what that means is you need $1 to be given 18.34. And then you need €1 to be given, let's say, a 1.3, let's say if it's trading at 1.34, for example. Meaning in this case, euro is stronger. €1 they will give you 1.34 US dollars. So in this case, the value of the base currency is always a 1. The exchange rate amount applies to the quote currency. It's like you are quoting from the stronger currency. I'm not sure if my explanation is correct or you have questions on that, but that is what it means, the quote and base currency. Let's see if we have questions on that. You understand what is a base and quote currency? Let me just mute you all. Not mute, unmute.
Yes, no, I think it's clear. I think we're good.
About
I'm
spreads.
good.
So what about spreads?
What about?
Spreads.
Spread.
Yes.
Okay, we can add it as one of the points that we will look at. Spread. Or we can simply just look at that now quickly.
Can you clarify on the code and the base? Not getting it right. Which one is the code and which one is the base?
I say the one on the left is always the base. The one that is always a 1, that is the base. And the one on the right is always the code.
Okay, I got it.
Okay, good.
Okay, sorry, I also have a question regarding the base and the code. So like the one on the left, is it always the strongest against the one on the right?
Not the case, but in most cases, it's always the strongest compared to the one on the left.
All right. Thank you so much.
Yeah.
Are you saying, in other words, that we use the quote currency to buy the base currency in most cases?
I didn't get your question. In other words?
I'm saying, in other words, you are saying when we are trading Forex, we use the quote currency to buy the base currency.
I don't know what you mean by that, but we are probably going to confuse each other here. Remember when you are trading, let's say when you click, this will be covered well in a fundamental. Let's say you have USD cards. Okay, I'll say no, that is not what I was saying. When you have USD cards, when you click buy and when you click sell, These are two opposite orders that you are telling your broker. So when you click buy on USD cards, in this case, you are buying the USD and you are selling the card. You are in favor. Let me just mute you all. When you click buy button, you are in favor of the USD and you are against the Canadian dollar. Meaning, based on your analysis, you believe that the value of the US dollar will appreciate compared to the Canadian dollar. The Canadian dollar will depreciate. That is the meaning of buy. Remember, when you are pressing a button, you are buying and selling simultaneously. I'm not sure if I explained this earlier, but we're gonna have this in the fundamental part. And then when you click a sell button, you are in favor. It's a sell, but in this case, on a sell, you are in favor of the card. You are against the US dollar. When you click a sell, it means you want the Canadian dollar to appreciate. When the Canadian dollar, when the currency that is on the right appreciates, the chart goes down. You're gonna click sell. And then when the currency on the left appreciates, you're gonna click, compared to the other one, you're gonna buy, you're gonna click a buy. So during fundamental, it's quite confusing. There will be a time that news will be released, and if it's positive for the cards, positive means it's in favor of the Canadian dollar. It will be good for the Canadian dollar, but on the chart, on the MT5, we are going to click a bar, a sell. Meaning you need to understand, it will take me time to explain this because it needs to be like a step-by-step development of the explanation on in which one in favor and so on. What I'm trying to say is, we are not saying that when you are buying, you are always buying the US dollar with the one on the left. No, we need to have a deeper understanding or a clear understanding that when you are buying, which one are you buying, which one are you selling? And when you are clicking a sell, which one are you buying and which one are you selling? Because in most, not at all cases, not in most, at all cases, when you click a buy button, when you open a position, there is always a currency that you have bought, and there is always a currency that you have sold. Meaning, when you click a buy button, there is a currency that you have bought, there is a currency that you have sold. When you click a sell button, in the case of a sell, there's a currency that you have bought, there's a currency that you have sold. It's called simultaneous buying and selling of currency. I will advise we reserve that topic in the fundamental part, because now we'll just confuse what is fundamental and all that. But hope you will still attend that lesson when you're going to have this topic on its own. So you will re-ask it, or maybe by that time you might not even ask it because you will have an understanding on that. Are we okay? Can we skip that for now? Okay, good. We say, yeah, I got it. All right. We move forward. Let's not rush things. Forex is a very, very it's something that really needs more attention. We are done with base and core currency. Next thing that we have to cover is leverage. After leverage, we move to margin. After margin, we'll add, we have spread and commission. Someone asked about spread. We have spread here at the bottom. Yeah, but we'll see if we can cover it now. But most of the things that you're asking, this is a full course. So Just as some of you are asking things that are ahead of us. Okay, let's look at what is leverage. Leverage is the simplest thing that you will understand. Leverage, in simple terms, it's a loan. There are loans here in Forex. You can get a loan from your broker. It's borrowed money. Borrowed money is just the same as loan. Leverage is borrowed money that you get from your broker to open more or bigger positions. Meaning, this loan, they don't just give it with 0. You cannot get a loan from the broker if you have 0 balance. You need to give in something small, then you ask for a loan for more money to trade with. How do you then do that? Let's say you deposit a $10. You don't have enough money. You can deposit a $10 and then you can borrow even a 10,000 from the broker to trade with. With your small $10 deposit, first the broker will ask you for a small deposit, then they can give you access to any amount or to a specific amount using leverage that you can borrow to trade with. Meaning, with a $10 deposit, you can request a loan from the broker of a 10,000 to trade as if you have a 10,000 in your trading account. That is what is known as leverage. It's borrowed money from the broker. It may sound interesting. Yes, it is interesting. Meaning, with your $10 deposit, you borrow a 10,000. This 10,000, you will trade as if you have a 10,000 in your trading account. If you double this account, of course, you are going to have a 10,000 profit in your account. And then if you lose this account, you are only going to lose a $10 that you initially deposited. Let's not be too excited. Leverage, it's borrowed money that you borrow from your broker for after you make a small deposit. How do we then calculate leverage? Leverage, it also uses multipliers. It comes to leverage, you will see it denoted with 1 to 10 or 1 to 30, 1 to 100. This is how you denote your leverage. 1 to 1,000. Now there are new brokers that are even giving 1 to 300 and 1 to 2,000. I mean, 1 to 2,000. It's quite crazy. Meaning, this you just simply have to multiply your deposit. When you open your account with deriv, you don't choose the leverage. There's a way to control the leverage risk because there's a risk on it that I'll explain. There's a way to control leverage risk or the leverage exposure using the lot size. The lot size still plays a bigger role in this case. What you do after you deposit a $10, for brokers that gives options on leverage, with deriv, automatically they set it 1 to 1,000. And you don't have an option to change it. But it's not a problem. With other brokers, when you open your account, you are given an option to choose which leverage do you wish to use. Let's say if you deposit a $10, then with a $10 leverage as your choice, this $10 will be multiplied by 10 to get you 100. With a $10 deposit, you will be able to trade as if you have $100 in your trading account. With other brokers, you choose as you are when you open your account, you choose which leverage you want or the amount of loan you want to be getting per deposit. You can also choose 1 to 1. If you don't want leverage, you can choose 1 to 1. meaning the broker will not give you any loan, will not borrow you any money. You just trade with your money. That is it. And then if with a $10 deposit, if you choose a 1 to 1,000 as your leverage, this $10 will be multiplied by 1,000. You will be borrowed as if you trade as if you have a 10,000 in your trading account. Leverage may work for you as well as against you. Let's not be too excited. What will happen is we bring back the lot size story. With the leverage of, let's say you deposit, let's get back to our chart. With currencies, the minimum lot size is a 0.01. Let's say with a $10 deposit, if you deposit a $10, with a leverage of 1 to 1, you will only be allowed to open, maybe, just as an example, 2 positions. You buy 0.1, you buy another position of 0.01. Then if you want to add a third position of 0.01 with a $10 deposit, the broker, you'll hear a sound that says, "Ting," and an error message that says you do not have enough money. Meaning with a leverage of 10, maybe you'll only be allowed 2 positions. With that same $10 deposit, if you choose a leverage of 100, let's say someone have a $10 deposit and leverage is 1 to 10, that person will only be allowed to open 2 positions, then it will say not enough money. Someone with a leverage of 1 to 100 can be allowed, with the same $10 deposit, can be allowed to open up to 4 positions, 5 positions, or even 7 positions. Someone with a 1,000 leverage with the same $10 deposit can be allowed by the same broker to open even 20, 30, or 50 positions just with your $10. Meaning, with your $10, if you only have 2 positions and it goes in loss, maybe you lose a $2 only because your risk was small. With your $10, if this position goes against you with your 1,000 leverage and you have 20 positions, by the time this person will be in a loss of a $1, yours might be in a loss of a $9 because you have a lot of positions. By the time this person will be in a loss of a $1.10, if you guys open similar on the same instrument, your account will be gone because you over-risked. Meaning, leverage is just a loan that you get to take a bigger risk. When you've been a loss, you've been hot soup. Your account can quickly go because you are allowed to open more positions. And then, if you are in profits, of course, leverage can work for you. Someone with just 2 positions can be in profit of $2, and you with 10 positions can be in profit of a $20. This, if you see, it's a 50-50. When you are in loss and a bigger leverage and more positions, your account can quickly vanish because the loss will be big. Your $10 can quickly disappear. And when you are compared to the one with a lower leverage, and then you with a bigger leverage, when you are in profit, you can quickly make a lot of money compared to someone with a smaller leverage. Meaning, leverage, these are the combination of leverage, your available balance, the lot size. We're going to cover that in the future when I will be helping you develop your own trading strategy based on your account size or the balance on your account. Hope we understand what is leverage. Let me just unmute you all to come through if you have questions. or we can move forward on leverage. Do you understand what is leverage?
Yes, yes, I understand. I think we can move ahead.
I have a question.
Sure, you can ask.
Okay, so you are saying that the leverage only helps you to put in more positions. It only determines your amount of position that you need to place in.
Yeah, that's correct.
Okay.
That is based on your deposit. You can use your deposit to borrow a loan based on your deposit if you want to open more position with that amount that you have.
Yes, I have a question.
Sure, you can ask.
So the borrowed money, do I pay it back?
Pardon? I didn't get you well.
The borrowed money, is it paid back?
No, what usually happens, the borrowed money, you don't get a 10,000 in your account. Your balance will still be a $10, but they will just allow you to open more positions. What will happen is if you are in a loss, you are not going to lose more than a $10. The moment you open more positions and your loss goes quickly in profit because you have more positions. When you've been loss of a $10 or when you've been loss of a $9, let's assume you have a $10. That is what you deposited. When you've been loss of a $9, $9.99, the broker will automatically close the position for you, and that is what is known as a margin call. And there's a movie called Margin Call that I'll recommend you all to go and watch. Margin call is a situation when you have running trades with brokers, you cannot lose more than what you have deposited. Though sometimes they write in their disclaimer that you might lose more than your deposit, but it's very rare. The system is very smart now. If you deposit $100, you open your positions and those positions are going in a loss. You are going to lose, let's say when it's in 50 minus 50, that is a negative 50. It's fine. The moment it reaches 99.99 what, it's not you that is going to close. It's not the stop loss. Maybe the position, they are far from the stop loss. If you did not do your calculations well, it's possible that you open your position, you set your stop loss, but if you got the mathematics wrong, maybe you took a lot of positions on a small account. Your trades might not even, let me just mute you all. The trades might not even reach your stop loss. Those positions can be closed. In this case, when you are having $100, you open a lot of positions. When you are in loss of a 50, it's fine. Loss of a 70, it's fine. Loss of a 99.99, the broker will automatically close those positions for you. That is what is known as a margin call. If you have used a leverage of a 10,000, the broker only helped you to open a lot of positions, but unfortunately, you are not going to be helped in a case of a loss. You are only going to lose what you have deposited. Hope it's clear there. So that's when I said it may work for you as well as against you. So you really need to know the math and to understand the combination of lot size, the stop loss amount, the leverage that you are using, as well as the margin. That is the next thing that we are going to cover. Is it clear there? Let me unmute you all. Okay, you can come through.
Okay, say I have a...
Okay, let's...
can I ask first or maybe?
Sure, you can ask.
Okay. I have a question. Can you show us how to borrow that fund?
How to borrow that money, I will not be able to show you, but it's something that you find on your broker. You go on your broker's website. This is how to, not on MT5, it's on the website. You go on the broker's website, then let me see if I'll have access to my XM account. Derif doesn't have it. Let's move to. It's on your profile. It's basically in the settings on your profile on the broker's website. For brokers that gives option to set the leverage. It's not a difficult thing to do. You just go in the on your profile settings, just like you change your password, you will find that option there. I see I have someone's accounts logged in. XM is another broker that you can use. We should be able to find it. I haven't used XM in a while, but let's just quickly go through and see where we can find. This should be members area. We are on. Let's see if we can play around here. Change password, close account, notification, refer a friend.
You go to my account.
Okay, let's go on accounts. Is it here? Any XM user? Yeah, I see here. Then let's select this option. Can you see this option? Change leverage. It's right there.
Yeah.
Yeah, change leverage. So depends on the broker's website design. But the whole idea is you log into your account on the broker's website. Then you play around with the settings. You should be able to find that option. Change leverage. In this case, they are giving us a different type of leverage. So you choose now which leverage you want to use. Hope it's fine there.
Yeah, it's a bit clear.
Okay, good. Any other question?
Yes, I've got a question.
Sure, you can ask.
Okay, let me say I choose the second cycle, the way it's 2/1. Does that mean I have my deposit has to be 20 up or how?
This one? 2-1. I'm really not sure what they are trying to do here. 1-1. Oh, they have it in opposite. Okay.
Opposite,
this is 1-2. They just did the. Let me just mute you all. Okay, first, how much you deposit, it's your choice. For XM, the minimum you can deposit, it's a $5. You get it? And then that deposit is what they are going to multiply using leverage. How much to deposit? It's you to choose. It's you to decide. You are the boss on that one. Meaning if you choose this 2-1 leverage, if you deposit a $10, they are going to multiply your $10 by 2. Your account, you will trade on that account as if you have a $20. 10 times 2. Simple math. And then if you choose a 1 to 10, after you deposit a $10, that $10 will be multiplied by 10. You will trade as if you have $100 in your trading account. 10 times 10. If you choose a 200, that $10 will be multiplied by 200. Leverage, you can choose any leverage you want. What determines is how much is your deposit. That deposit, you deposit what you want. That deposit is what will be multiplied by the choice of your leverage. Hope I answered that question. Let me just mute you now. Yeah. Is it clear then?
Say
Okay, in
I still have a
case
no. Can I ask?
Sure, you can ask.
Okay. Let me say if I deposit $10, then I choose $100 the leverage. So it's $10 times 100, right? Then it will be, let me say it's $10 times 10, then it will be $100. Okay, now if I start trading, then I start making loss up to $10 there. So meaning my account won't be brown or something.
If you deposit a $10 and you make a loss, the moment the loss goes at the same amount as what you have deposited, those positions will be closed automatically. It's known as a margin call, meaning you will lose everything you have deposited, meaning your account, what is called blowing account, your account will be blown. You will have nothing in your account unless you have to make another deposit.
Yeah, Mr. Sultan.
Is it clear then?
Yeah, it's very clear, but
clear.
I have a suggestion, right?
Okay.
Like how I understand, it seems like there's a misunderstanding between you and my colleagues, because like they don't understand the whole process about the leverage. Because they will be thinking if they deposit the money and then there's this money that the broker is borrowing them, so they will be thinking that this money is going to be plus the amount that you have deposited into your trading account. So that's how I think there is a misunderstanding between Matilda and my colleague.
Yeah.
He's speaking very low, like he's far from the mic, but based on what he said, what I understand is there's a confusion. You know, when you borrow money from someone, they give you that money. But in this case, when you borrow money from the broker using leverage, they don't give you that money. That money will not be in your trading account. What will happen is your broker, in their system, they will just allow you to open more positions. That is what it means. But that money will never be in your trading account. It's how much position they are allowing you. That is the role that the leverage will play. But that money will not be in your trading account. You get it? So what you are going to have in your trading account is only the money that you have deposited. That means what you are going to lose is what is in your trading account. That is what you deposited. The leverage is just an exposure. It's just a programmed thing for you to open more positions based on your balance, but it will not be in your account. There are money that broker puts in your account called bonus. Bonus, there are brokers that when you deposit $100, they add for you $20. That is a 20% bonus. Or if you add, you deposit 100, they add for you $50. That is a 50% bonus. You deposit $100, they add for you another $100. So you have 200 in your account. That is known as a bonus. But bonus comes with terms and conditions. That is another thing on its own. Like this broker, XM, they do have bonus. Brokers have bonuses. Some bonuses are very nice. Some they come with terms and conditions. In a way that if you make a loss, you only lose what you have deposited as well with the bonus. And then if you make profit, it's fine, it's your money. But you can only, even if you have, let's say you deposit $100 using bonus, they will add $100 for you. But if you are making a loss, that bonus of $100 can never be lost. You can only lose up to $100 again. That is only your original deposit can be lost. They are money that they gave you as a bonus. You cannot lose it. When you lose $100, those positions will be closed while you still have another $100 as a bonus. A bonus is just another kind of like leverage just to allow you open more positions. You get it? But losing, brokers will never lose money that you have never deposited. You will always lose only up to what you have deposited, whether you are using leverage, bonus, whichever thing that you want to use. Let's see if we have any other questions. Any other questions?
Yes, I have a question here.
Sure, you can ask.
Okay, so let's say I got that borrowed money from the broker and perhaps I run into profit. What is gonna happen to that borrowed money?
Then you run into
Profits, then I make profits rather than losses.
the profit, all profit made is yours. That is what is going to happen. Let's say if you deposit $100, you borrow money, you make profit of a $500. Total, you'll be having a $600 in your trading account. That $600 is all yours. You can withdraw it. That's what's going to happen. Did I answer your question?
Yes, very clear.
Yeah. The broker will not claim any share. The broker will not want to benefit from the profit. The whole profit you take.
Okay, that's clear.
Okay, good. Any other question?
Yeah, I
Yes,
think
I have, but
everything is
mine.
clear now.
Okay.
I have a question, but mine is I want to take you a little bit back at the base and code.
Okay.
It's not that a long question, it's just a simple. How about if I'm trading now VIX25, the codes and the base,
I've said it
or it's
earlier.
not base and the code?
Let me just mute you all again so I answer that question. I have said it earlier that base and code currency, it's only applicable to currencies. Volatility, boom crash, VIX, it does not have that story. Why? We'll have a session on its own to really understand these instruments. What are these instruments? Where are these informations coming from that we are seeing on the chart? Volatility, it's an artificial market. Remember, currencies, they use live market based on exchange rate, transactions that are happening in the bank, what's going on in the world, the war between the Ukraine and Russia, it affects these exchange rates. The trades between currencies, imports and exports, all those things. Volatility, it's an artificial market. It's a programmed market. It's a homemade instrument by Deriv. They have programmers that sits on a computer. They program a software that simulates the real forex market, that simulates this euro, USD, and so on. Meaning, these volatilities, they are not in pairs. They are just single instruments. So you cannot compare them as base and code because they are not in pairs, it's just single instrument. And we're going to understand very well these things a bit later. Because we need to understand, if you see on the course outline, we need to understand these instruments. What is boom and crash? Where does it come from? What is volatility? What is euro? What is USD? What is NASDAQ exactly? When you talk about NASDAQ, this is an index. An index is a combination of companies. What is S&P 500? What is Bitcoin, cryptocurrency? We're going to understand these instruments one by one. So long story short, base and code currency, they are only applicable on currencies because they are pairs. While VIX, it's a single thing. It doesn't have that story. I hope I answered the question. Let me just unmute you. You can come through. Hope the question is answered.
Yes, it's answered.
All right, Beata.
Thank you.
Welcome. Any other question? I see we are running out of time. Let's quickly cover what is margin. Margin, it's a topic that we are supposed to cover. Let's quickly cover in the next 6 minutes that we have. This number here, free margin, when you don't have any position open, this number will always be the same as this number. It's quite confusing. Even me, it took me time to understand what exactly is margin. But it's a very important number, especially when it deals with margin call. You need to understand margin. Margin call is the word itself just sounds. Margin call. When a broker automatically closes your losing position because you do not have enough funds to hold those losing positions. You have $100, you open a position, you are losing, you are in $90. You don't have enough money. Let's say if you are to still hold, the loss will continue. When you reach 99.99, the broker will close those positions, and that is known as margin call. When you do not have enough margin, the broker closes your position for you. On currencies, speaking under correction, most brokers will close your positions when your margin falls below 25%. We have South African brokers, new upcoming South African brokers that can close your position below 25%. Meaning, let's quickly go through that. Meaning, what is margin? Let's try to open a position. A margin is how much money do you need for you to open or hold a certain position. That is margin. How much money do you need to open or hold a certain position? That is margin. Let's say we open a position with a one lot. We open, we are going to have what is known as, let's just open another one. Okay. Now we have a volume of 2 lots, and we have margin of a 1.45. Meaning, if you want to open 2 lots on a volatility 25 index, you need to have in your account here at the balance. This is the requirement. This is just the requirement that you needed for you to open these 2 positions. Meaning, for you to open these 2 lots, you needed a $1.45 US dollar in your account. Meaning, if you deposit a $1.45 in your derivative account and you want to buy volatility 25, you can only buy, the maximum volume you can buy on volatility 25 is 2 volumes only. You get it? If you want to open 3 positions, let's say of 1 lot, your broker will say you do not have enough money. Someone with a $1.45 can only open 2 positions, the maximum. This is how much you need. If you have a $1, you will not be allowed to open these 2 positions. That is, the margin indicates the money required for you to open that position. And then there is margin level, margin percentage. margin percentage, this is where your leverage kicks in. Apparently, with the balance that we have, we can still open a lot of position. If you see that using leverage, the percentage have boosted. Remember that initially, before we opened the position, the percentage was the same as the balance that we have here. So what we have here is after we open, leverage have boosted. With your 9,000 in your account, you have up to about 686,000. They are treating the money that you have, the real money that you have on your account, it's a 9,900. But using leverage kicking in, they are telling you that you still have up to like 686,000 money that the broker have borrowed you. Apparently, you still have a 686,000. This is money that you can still use to open more positions. This is a combination of your balance, the leverage that have kicked in, and they are showing you how much money you have for you to be able to open that position. It might be quite confusing, but you'll understand later. Like I've indicated, even me, it took me time. If we add positions, if we add more positions, let's say with a 10 lot on this volatility 25, it will show you that for you to open this like a 12 lot, initially you needed to have $8 only in your account. Someone with an $8.71 in his trading account can open 12 lots on his on this broker. And then they are telling you your balance is a 9,000. This is how much you have opened. You needed an $8, but they are telling you this is the margin level that you still have, and then there is free margin that we are skipping here. That based on the lots that you have opened, you still have a 9,900, as if you still have a 9,900 whatsoever free to utilize from your balance. You get it? So that is the whole role of the margin. I'm not sure if that is the best I can explain it. Hope you have an idea. I'm not sure if you really understand it, but do you have, for now, I'll just expect you to have an idea on margin. So what will happen with margin is this margin level, the free margin, when you start to go in loss, let's assume this loss starts to go to 5,000. This free margin will start to decrease because they are telling you now you still have about 9,000. If the trade starts to go in loss, you see that the available money that you have in your account is starting to decrease. Meaning if it goes in negative 2,000, with a 9,000, you no more have a 9,000. Since you are in negative, you only have about a 7,000 left. They are warning you that with your 9,000, you are in a loss of a 2,000, and the free margin warns you how much money you have left, or how much, though the equity also shows that, but the margin shows you how much of your power do you have, how much power do you have for you to hold that position. So the more it decreases, the more you go in loss, the margin shows you how much more power. It warns you about your power, that you are getting weak and weak on your balance. And then if you drop below 35, you have an option with your broker to activate an email notification as well as an SMS notification, a phone notification, that if you are sleeping or you are busy, you have running position, you have two options. If you don't want to blow your account, which I'll not advise, the broker, if your margin, if you are getting weak, maybe you get, you deposit $100 and you are in a negative of a $30, but you still believe that if you give it more time, that trade can turn around and go in your direction. People can deposit more money so that you don't blow. Maybe you only have $100, you are in negative 70. You can deposit another $100, so you have a total of a 200 with a 130 available again. But what the broker will do, when your margin or when you start to get weaker, the broker can send you an email that you are in a serious loss, your balance is not enough. Your balance is not enough. That is a margin call actually. Your balance is not enough. Do you wish to deposit or you want to allow it to blow completely? So that is the whole thing of the margin idea. There are some charts here. Okay. I think he must jump to technical analysis because it's very important. Relax. We are not jumping things here. We need to go step by step so we understand every point. Okay. Yeah, I think that is what I had for you tonight. We are 6 minutes past 10. Hope it was fruitful. It's Q&A session now, so we round up.